Now, with the earnings season at its end, British banks are all in the black. What can we expect going forward? Is Europe finally on the mend? Let's ask the head of strategy research from Bank Julius Baer. Christoph Riniker joins me now. Hi, Christoph. Good morning. Thanks for joining us.
Good morning.
I mean, the European earnings season just slightly worse than the US's, but both in pretty good shape, Christoph. What can we take away from the second quarter reporting season on both sides of the Atlantic?
Well, you're absolutely right. The figures again were very good. We have seen in Europe, for example, positive to negative surprise ratios of 2 to 1. In the US, much higher figures, but nevertheless, it's always better in the US. And so I think actually the picture it fits into our overall positive view that we have on equities going forward. Of course, there are some differences to be made on a sector level. So defensives were rather disappointing, especially consumer staples in Europe, while consumer cyclicals and also financials, as you have mentioned before, did quite well.
But you say that earnings expectations for 2010 and 2011 remain too positive. Why is that?
Yeah, I'm talking of consensus expectations. Normally, bottom-up expectations, they are very positive in our view. Probably thinking, or let's put it that way, when you look at earnings revisions, and you see always, or most of the time, analysts revising in fiscal year 1 earnings and leaving the fiscal year 2 earnings unchanged until they become fiscal year 1 earnings. And so you have the situation at the moment that they are still quite high, especially fiscal year 2 earnings. And our take is that taking let's say, still positive GDP growth, but slowing GDP growth figures into account, we think that going forward, going into 2011, that earnings momentum has to slow, and that we don't see in that extent we would like to see with consensus figures.
What does it mean for equities? I know you're a big fan of the Eurozone, particularly Germany, Christoph. I mean, is this where we should continue putting our money? I mean, today export data from Germany reinforcing that, I presume.
Yeah, the point, I mean, starting with the global UI preferring the Eurozone to the US, for example, is, with the point I was mentioning on the GDP growth, the differentials we see from there, but also other factors, brings us to the more positive view on Europe. And then going into the Eurozone, we still have these positive factors on Germany, like the international exposure into Asia. And these factors, of course, at the moment it's a bit underperforming due to the low banking weight in the sector. But I think currently that going forward there are still few factors which are positive for Germany.
Christoph, thanks for joining us. Christoph Riniker, their head of strategy research at Bank Julius Baer.